is this thing working? Oh, there we go. Hey, what's happening? Tim with Not My Trading. Just wanted to jump on here, talk about a little bit about what happened in the market today. Don't really have time to make a full video and do all the editing and whatnot. It's 7:30 in the evening where I am. I still need to do dinner and kids' baths and all that stuff. So thought I'd just jump on here live. Wanted to talk a little bit about BDR. That's the main reason I came on here. I feel bad because I'm sure there are a lot of people that got really screwed by BDR today. I mean, yeah, imagine if you were the one that bought way up here at almost $4 and then sat there in agony for this ridiculous halt all the way until afternoon, and then had it open up way down here in the twos. Talk about bad luck. I mean, on one hand, what the hell are you doing chasing this up here? I mean, if you're a new trader, completely understandable, because you don't know. If you don't know, you don't know. There's nothing you can do about that, and then you get stuck in that situation. And even if you're not a beginner trader, even if you're a seasoned veteran and you just like scalping these halt plays, it's still possible that you get stuck in that situation, and that totally sucks. But personally, you've heard me talk in many videos. If you're a subscriber, or if you're not, subscribe now. But if you've watched any of my other videos, I know many videos I've talked about the dangers of buying these stocks after they've been halted. Typically, I will buy them going into the first halt, sometimes the second halt, but after that, I typically don't touch them, even if they're, they might get halted 18 more times throughout the day, but it just gets more and more risky all the time. And today was a prime example of what can go wrong. Typically, when you're buying a halt, for those of you that don't know, by the way, let me back up. Stocks get halted, volatility halted, whenever they are moving too fast. If they're moving too much too fast, then they'll get a circuit breaker halt, as they call it. It just triggers some algorithm or something that stops the trading on the stock in its tracks, typically for 5 minutes. If it gets halted multiple times, then sometimes you'll see a 10-minute halt, or I've seen halts that were just for random amounts of time, even on volatility halts. They're typically 5 minutes, sometimes 10 minutes, but like I said, sometimes I've seen them where they just are halted, and then you don't know when it's going to unhalt. 5 minutes comes and goes, 10 minutes comes and goes, and then all of a sudden, bam, the thing unhalts at a random time. So you never really know. It's kind of one of those awesome mysteries of the markets. But as far as what a halt is, it's when the stock is moving too much, too fast, and it gets stopped. So if you look right here on my screen, you can see this little dash. This is the 1 minute chart for BDR today, by the way. Blonder Tongue Labs Incorporated is the name of the company. So anyway, this little line right here, and if you look down here at the same time in the volume, you can see at the corresponding same time, there is no volume. That's because the stock was halted at that point in time. So the reason it's dangerous to play halts, people like them because if it's moving too much too fast, well, obviously there's a ton of range in it. So day traders like myself love that, jump all over that volatility, and you can make quick money. But also, you risk being stuck on the downside because you don't know when the stock gets halted and the trading ceases to exist. You don't know where the stock's going to open. So typically, if the stock is going up and it gets halted, it's going to open up higher. But I've seen many countless times where a stock gets halted going up and then it opens down. So you never really know. But for the most part, it's a fairly safe bet. More often than not, definitely over 50% of the time. If the stock is going up into its first halt, it will open higher and a lot of the times continue higher. But after a stock gets halted, it seems like it's more likely to get halted after that point. And I'm sure there's math, and you might be able to look up on NASDAQ's site and find out exactly when, like how much it has to move in a certain period of time for the stock to get halted. I don't know that information off the top of my head, but I'm sure it exists. I'm sure there's a mathematical equation that if it moves X amount percent in X amount of minutes, then that's when it gets halted. But I don't know that off the top of my head. I'll have to look it up. If I do look it up, I'll put it in the comments later tonight, so check the comments. But anyway, as far as halts go, they're just very risky. So if you're a new trader and you don't know what you're doing, you need to be very careful with halt stocks. Anytime you see that the stock has stopped trading and it's got this little spot where there's no volume and it's just moving straight sideways and it's a line, that means the stock is halted. You can also go to hey, what's up? I know you've commented before, but just saying what's up to you. I want to say your name is Mehmet. Is that how I say it? Anyway, you're saying what's up in the comments. So, hey, what's up? Anyway, if you go to, let me just drag this over here to my screen. Here you go. NASDAQ.com. If you want to see the halts, you can go to NASDAQtrader.com, and this will show you the halts. So, for instance, BDR is right here from today, right here as well, and over here you have the halt code. So that's the reason that is given as far as why the stock is halted. This is the ticker, obviously the symbol. This is the reason it was halted. So if you're wondering if a stock was halted, you can go to NASDAQtrader.com and then go to the current trading halts. I also look at this quite a bit just in case I miss something, because a lot of times one way to find stocks that are moving, that day traders are jumping all over, is to look at the halts. You can go back through the halts, and if you see a stock's been halted multiple times, there's a pretty good chance that it's a low float stock and that it could be what day traders are flipping for the day. So I get too much volume on a low float stock and it starts getting halted because it's moving so fast. Sometimes you will see stocks get halted that have no volume. So you type the ticker into your trading platform and you'll be able to tell if it doesn't have any volume, because sometimes it may only be traded one time, but it's such a big jump in price that it ends up halting it even though it has no volume. So anyway, what you're looking over here, LUDP is a volatility halt. You can go to trading halt codes right over here and scroll down a little bit, and this is going to explain to you what the code is and what that means. So LUDP, as you can see right here, is volatility trading pause, which means it's moving too much too fast. That's the one you see the most common as far as volatility halts. Let's see, another one like you saw today on BDR. The code ended up being T1. I think it might have it got halted for volatility, but then it ended up, the long halt was T1, which means it was halted for news pending. That means that they're waiting to release some kind of crazy news that they think is gonna either shoot the stock up or drop it big, and so they want to halt the stock in order to try to mitigate how much it's gonna move, to avoid it crashing or spiking ridiculous amounts, even though that doesn't work at all, because it actually just halts it, and then whenever the news comes out, it does that anyway, so it seems kind of pointless to me. But anyway, T1, and then whenever it goes to T2, that means that the news has been released. The stock is still halted, but the news has been released, and that's your cue to go like crazy and try to find the news. If you don't have it showing up on your platform, that's your cue to be searching the news to find out if it's good or bad before the stock unhalts, so you know what you need to do. But anyway, so I've got it bookmarked up here at the top of my screen. I suggest you do the same. I also have Market Watch, Stock Twids, so a couple different things, that a stock screener over here, my CMEG account, all kinds of different things up here bookmarked that are good for trading. As far as if you're in a hurry, you can click on that. So if you look down here at BDR, you'll see that it did T1 halt, and then it ended up releasing the news before it got unhalted. Anyway, I'm kind of getting off on a tangent about the halts, but the point is, halts are risky. If you don't know what you're doing and you're a new trader, you might want to steer clear of them, and definitely steer clear of them after they've been halted multiple times, because it's only a matter of time until you're going to get stuck in a halt on the way down. So if the stock is going up and it gets halted, it typically, more often than not, will continue up. It'll open higher and keep going. If a stock gets halted on the way down, that's your worst fear, because the same thing applies in reverse. If it gets halted on the way down, it's typically going to unhalt quite a bit lower and then continue down. You're going to be looking at a big loss if you're on the long side. So anyway, this thing got halted, and it's just one of the risks of these low float stocks, and especially ones that have been halted. You can find yourself in this position, and the news ended up being no news. So it's kind of funny, because the news was there is no news. The company came out and said, we have no idea why this stock was trading down around 76 cents yesterday during the day, and then it ended up spiking all the way, doubling yesterday. It went up 100% at one point. No reason at all, other than it's a low float, and once it starts getting picked up on scanners, people start trading it, day traders. Same thing today. It comes out, it spikes up, it gets on everybody's radar like me that's running a scanner. You start seeing it pop up, then you can see that it has a very low float, so it doesn't take all that much volume for the thing to start skyrocketing. So it ended up going crazy and getting halted on the way up. And then that's your cue, especially as a new trader, to stay away from it. If it's been halted once and you came out on top, don't keep trying to flip it as a new trader. There are people, of course, that the more experience you have and the longer you do it, the more you can read it, the better your odds are that you're going to be able to scalp it and be on the winning side. But if you're brand new to trading, don't try it, because the next thing you know, this thing's going to be going down, and you're going to get stuck in a halt on the way down and lose a ton of money. Or in this situation, it gets halted pending news, and the news ultimately is there is no news. The company has no idea why the stock is up at this point, like 300 or 400%, and they came out and said that. So of course, naturally, it opens all the way down here at less than $2.50, and it was trading close to $4. So that really sucks. I know there's a lot of you that probably were in that situation, and hopefully you got out on this bounce. Looks like there's a decent amount of volume that hopefully people were getting out on this bounce. Hopefully you were not trying to buy this stock in this area, because it was doing nothing but going down. There was no shares to short, or I would have been shorting it like crazy, but I couldn't find any shares to short. Anyway, I guess the moral of the story is, if you're new to trading, do not trade halted stocks, especially after the first time. Maybe you can trade them into the first one, maybe on the second one, definitely not after that. Inevitably it will come down, and you'll get stuck in a halt on the way down. But the big kicker for this, or the reason that I would have stayed away from it, maybe I would have bought this breakout down here, just because at that point it wasn't up an insane amount. But after this halt up here, I definitely wouldn't have been buying it because there's no news. Guys, this is why a catalyst is important. And I'm not big on fundamental analysis. I don't read because I'm more of a scalper. I'm more buying breakouts and bull flags and things and scalping. So the news is not that important. But what is important to me as a long bias trader is that there is a catalyst. I very rarely buy stocks with no catalyst. So that's what would have tipped me off. And maybe there was some kind of catalyst, but the company themselves came out and said that they didn't know of any reason why the stock was up that much. And E-Trade didn't have news on it. You could Google it. You couldn't find news. If all else fails, you can go to StockTwits. If you're not familiar with StockTwits, let me just show you StockTwits here. StockTwits is kind of the devil, by the way. There's some good stuff on there, and I've found good information on there before, but more often than not, it's just a bunch of people talking nonsense, trying to persuade others to do what they want them to do. But you go in here and you go to BDR, which I did do earlier today when the stock was first spiking, and I was trying to find out if there was news or why the thing was going up. And even on StockTwits, I could not find any. I found a bunch of twits, but I couldn't find any actual news. So anyway, don't go on if you're holding a stock, and I see this a lot with new traders, and I did it myself whenever I was starting out. When you get in a stock and you are on the wrong side of it and you find yourself down a decent amount of money and you're going to StockTwits and you find a bunch of like-minded people that are telling you that it's going to go to the moon, and they make you feel better about yourself, make you feel like, hey, I'm not the only one stuck in this, and they'll tell you all kinds of reasons why it's going up and justify why they're holding the bag and why you should hold the bag. But do yourself a favor, because more times than not, you really should just be cutting the loss and getting out of it. Every now and then stocks will come back, but for the most part, you're just delaying the inevitable pain, and you find yourself in an echo chamber of other people who are holding bags and trying to convince you that the stock's going to go back up, and typically it does not. So be careful that you don't let people on here influence you. But what StockTwits is good for is, number one, if you don't have a scanner on your platform and you're having trouble finding something to trade, you can go to stocktwits.com and then look at this scrolling tape right here. If you can see at the top, there's a scrolling tape. The little fire is going to show you a stock that's got a lot of popularity. But then you can see it's a good way to find stocks that are up or down a decent amount. So if you're having trouble finding a stock to trade, this does have a ticker up here. And you can also go to, let's see, there's somewhere, maybe it's trending. I don't know. I don't come on here enough to see it. I know on mobile you can see all the hottest stocks, the top like 20 or something, but I'm not on here enough to really be able to tell you where, but I'm sure somewhere on here you can see the hottest stocks of the day. But up here, this little ticker that's scrolling here can give me some ideas if you're having trouble finding a hot stock to trade. But anyway, back to what we were talking about. So long story short, halts can be dangerous. Be careful with them, and especially look out for stocks that are halted or that are up big and you can't find any news on them. I don't care that much about what the news is in the low float momentum world. Especially if it's in the hot sector, like right now, it would be coronavirus, biotech sector, anything related to coronavirus or COVID, things like that. That's the hot sector right now. I'm getting some kind of error on my YouTube stream, so hopefully you guys can still see me. Anyway, yeah, I don't know if you can see me or not because YouTube's giving me some kind of buffering arrow, but the point is, look for stocks that have a catalyst. It doesn't matter so much what the catalyst is, because when you come to low float stocks, which means there's not very many shares available to trade in the momentum world, when they're getting some volume, they can move like crazy, and it doesn't really matter if the catalyst is stupid or not. If it's a ridiculous catalyst, it doesn't make any sense, fluffy PR piece, whatever, doesn't really matter. It just matters that there's something. There's some kind of reason. If there's a great catalyst, that's even better, and it can help the stock keep going and have longevity and maybe even get a second or third day out of the move. But as far as I'm concerned, I'm looking to flip in and out pretty quick, but I want there to be some kind of catalyst. If there's no catalyst at all, like this, you just run the risk of it coming back down on you very quickly. I don't like that. I want to mitigate my risks and have the best chance that a stock continues and that I can stay alongside and make a little bit of money without worrying about the bottom dropping out of it immediately. And when you have no catalyst at all, you end up in a situation like this where it gets halted for a long time just for the company to come out and say, by the way, there's no news. There's no reason the stock's up. So then it drops. Did get a decent bounce, which I'm actually kind of surprised at. It did end up bouncing from under $2 to pushing $3. So almost $1 bounce here, which gave people a chance to get out. Hopefully a lot of you, if you're watching this and you were stuck in this, you got out on the bounce, because at this point there's not a whole lot of hope that the thing's going to come back up. If you were stuck buying up here and you're stuck in it now, your best case scenario is probably going to be a little bounce tomorrow in the morning at market open, maybe. But other than that, you're going to be waiting a while until they come out with some kind of catalyst to spike the stock again, because when the company comes right out and says there's no news and no reason for the stock to be up, that pretty much is going to kill whatever momentum it had. As you can see, it does look similar to GRNQ yesterday, which GRNQ did have news. They had news that they were going to pay dividends in the form of giving shareholders of GRNQ, you were going to get one share or a few shares of some other company that somehow is tied to them, K-Swiss or something. I don't know if it was like KRNQ or I don't know what the ticker was, but they're going to give shares of some other crappy company to their shareholders, basically, and that's what spiked the stock and made the stock move. Not really that great of a catalyst, but as you can see, it went from similar to BDR today, from the 80s all the way up well over $3. So very similar move and very similar downside on in the afternoon. It came pretty much down to where it came from. So similar in a lot of ways, but the difference was this one actually had a catalyst. So instead of just getting one giant spike and then a halt, you did have a little bit of longevity as it pulled back and offered some opportunities to curl back up and keep going. That's part of the difference between no catalyst and having a catalyst. Another hot one today was AESE. That one came back down. If you guys aren't seeing the pattern here, if you're brand new to the low float momentum stock world of day trading, you can kind of start seeing the pattern here that what goes up pretty much comes back down. These low float stocks, low price stocks, very often go up and then come back down. So that's why once you've been around a while, you take profit. You don't end up holding the thing the entire day or trying to hold it multiple days, because more often than not, the thing comes back down. So don't forget to take profit. If you're buying the breakout or whatever, don't get greedy. Take your profit, or at least take half of it off the table and then hold the rest of it. And as it goes up, get the rest of the way out of your position. This one did offer some opportunities. This is one of my bread and butter patterns. I did not trade this today, however, but had I seen it, it breaks out past the high of day. Here's your high of day. Breaks out past the high of day. Then it comes back down and tests the high of day, and picture perfect. Then it keeps going. So that's what you like to see. That would be picture perfect setup. You could buy the breakout, but what I like to do is buy a little below the breakout, or ideally, like with this stock, I like to see it come back down and test that high of day, and this thing was just perfect. Comes down and tests the high of day, and then starts taking off, and that's when you want to buy it. When it holds the high of day as support and then starts taking off, that's a good spot to buy it. And a lot of times in this situation like this, I would have bought that on the second green candle. Probably it held right here, and then I'd be buying on this green candle, and then I would set my stop loss just below the high of day. So if it came back down, I'm stopping out and getting right back out of it. And if it continues up, I'm taking part of my profit up here as it gets to the high of day that it made here. I'd be taking part of my profit there, and then I would hold the other half of the position to see how it went. If it broke out and kept going, then I'd be selling on the next pullback here. Maybe holding a small piece up here if I was smart enough to do that, which I'm not half the time. Half the time I'm selling half and then I'm getting out the rest of the way, and it goes on without me, but that's okay. That's where it comes to not being greedy and taking profit. So anyway, let's see what else. I was going to talk. I had a subscriber or a guy comment about finding the hottest stock of the day. So to find the hottest stock, if you don't have, for instance, E-Trade Pro, I use this scanner most of the time. You can do like I said about StockTwits, where you go to StockTwits and it'll be scrolling at the top some of the hottest stocks of the day. You can also use free scanners such as FinViz has a free scanner right here. So if you go to FinViz/screener, or you go to Google and just Google FinViz, you can go to their free stock screener right here, screener. And then what you can do if you're trying to find the hottest stock of the day, this is where you toggle what you're looking for. So for instance, if you're looking for the hottest momentum stock of the day, you're going to go to top gainers. Okay, the downside, by the way, one caveat, the downside of using FinViz or Market Watch's intraday screener, or a lot of these free screeners, is that they're not going to register right off the bat. Like if you're looking for something pre-market, some of them do have pre-market screeners. I'm pretty sure Market Watch has a free pre-market screener, but if not, you can Google pre-market screeners and find a pre-market screener. And that, you're looking at the stocks that are up pre-market, the gappers, and then you're looking for one that has volume, and then you're typing it into your platform and seeing which one comes up with a setup after market open, and which one doesn't. But if you're looking at the market in the very beginning, you're going to have to be looking for a pre-market screener or something that has live real-time data, because like FinViz, I'm not sure what time exactly it starts showing the highest stocks of the day, the top gainers, but it's not right off the bat, or at least whenever I've gone on there and looked within the first few minutes or so of market open, it's usually showing yesterday's stocks and has updated and showed that day's top gainers. So that's the downside of the free scanners, and why I recommend paying. Either you're going to have to pay for a scanner like Stocks to Trade or some subscription service like that, or if you can find one for free, that's great. Share it in the comments or share it with me, so that way I can put it on a video. But as far as I know, there's some free pre-market screeners, scanners, whatever you want to call them, and then there's ones that come with your platform like this. This one does have a pre-market scanner, or this is scanning in real-time data all the time, so it works. Or you're going to have to pay for a subscription service like Stocks to Trade, which I have not done because to me it seems way too expensive when I can find the stocks right here for free. So if you use a subscription service, or if you have a good free screener, make sure you put that in the comments and let other people know what works for you as far as finding the hottest stock that's moving, but in real time, right away, early in the market. That being said, if you wait a little while until FinViz has had time to update, whatever time that is, I'll have to do some research maybe in the morning and try to see what time this actually switches over and starts showing that day's hot stocks. But once it does switch over, maybe it's 15 minutes, maybe it's 30 minutes into the market, I don't really know. But when it does start switching over, there's still going to be some opportunities after that. So you would go to, if you're trying to find a stock, you would go here and you would go to top gainers, which you just do this little drop down menu for signal. Go to top gainers. Then it's just a matter of what you're looking for. You're going to toggle these little boxes here to find out what you're looking for to narrow it down. So it's going to put them in order of percent change, because I clicked on percent change right here, so that is a down arrow. So now it's going to order them from the largest percent gainer to the smallest. I put in here over 1 million because I want something that has volume, so you can toggle that to put over 1 million shares of volume. If it doesn't have over 1 million shares of volume, that's not the stock that people are trading, because typically the stocks that I'm trading, the low float momentum stocks that day traders are flipping, they're going to typically have over 1 million shares of volume pre-market. So you definitely want something that has over 1 million shares if you're looking for, and right now we're talking about looking for the hottest stocks of the day. Then from there you can go to market cap, and it explains right out to the side in parentheses what that means. So blue cap stocks are going to be the big stocks like Tesla, stocks that have huge market caps. Tesla, Netflix, Google, all those stocks. That's not what I'm trading. I'm looking for nano cap or micro cap. So you can look at those. If you want to toggle it down more, you could click on nano, for instance. So now we're looking at stocks that are in very small market cap that are trading over 1 million shares of volume, and then you're going to find the hottest stocks of the day right there. So if you were to not put that in there, or if you were to not have the current volume in, and you just looked at any, and you're looking at top gainers, then you're going to look at volume over here. Say that you didn't put any of that in there, you're just looking at top gainers for the entire market. So that's going to give you the top percent gainer in the market. It's up 81% as of now, or as of the last time this was updated anyway. Then you're going to look at volume and see that it traded 12 million shares. So that's something that I could trade. That's a possibility. Next one down, 59 million shares. That's a possibility. Getting down here into 2 million shares on the entire day, not so much. That's not as much volume. If you go all the way down here to this one here, which would be GTIM, 482,000 shares, AESE. So let me show you the difference. So AESE I've already got up in eTrade Pro. And then let's look at GTIM, which is one that doesn't have, it's a percent gainer and it's in the top 10, but it only has 482,000 shares traded. So let's look at the difference. That's AESE. So let's do GTIM. So when you put it into your and I'm just doing this off the cuff, by the way, so not planned at all. If you're looking into a stock and you're trying to find what the hottest stock is of the day, and you have a platform to trade with, hopefully you do, because if you're day trading, you need a day trading platform of some sort. eTrade is really not the best day trading platform, but it works. CMEG is probably better, but charges higher commissions for better executions, no PDT, blah blah blah, but you do have to pay commissions. Anyway, so AESE, you can immediately, the more you do this, you can immediately weed out the stocks when you're trying to decide what you're going to trade. So you can go over to your FinViz. Didn't want to do that. Here we go. FinViz, and look here, and you can type in SYPR. You just, that's all it is taking what's over here on your scanner and typing it in. You can look at the volume. This is going to give you a good idea. If you're looking towards the end of the day and you've only got 400,000 shares of volume, then you look at the stock and you can tell that it's thinly traded. This is not something that I want to trade as a day trader because it's so thinly traded. There's no liquidity to get in and out of it. See these little lines here? All these lines represent periods of time, minutes, where there was no shares traded. So I know that that's not something that all the day traders are trading or something that I want to get into. Why don't I want to trade that? I don't want to trade that because with no liquidity, you can't get in and out of it. You're going to have a large spread, the spread being the difference between the bid and the ask. So you're going to have a lot of slippage because you might buy it, and then in order to get back out of it, you may have to take, you never know, 5% or some crazy amount of slippage just to get back out of the stock. It also means that it can drop huge amounts in short periods of time because of that. If somebody has a bunch of shares and they're trying to get out of it, they're going to put a number in there and take out all the people on the bid and just wipe everybody out just to get out of a large portion of shares, like the volume down here. So in addition to that, the patterns don't work. People like me that trade based on patterns and are looking for certain setups, the setups and the patterns don't play out when you don't have the liquidity. You have to have the volume. It has to be a lot of volume, abnormally high volume, in order for the patterns to play out and things to work the way you want them to. If you got a stock like this, not so much. It's going to have a mind of its own and the patterns will not play out. So you can look at this and tell the difference between this, which has tons of volume. Let's see what it traded, 140 million shares. So tons of volume. And you can look at that chart versus looking at a chart like this that's very sporadic and has a lot of dashes where there was no volume and no shares traded. So this is the kind of stock you're looking for. Hopefully that helps. I don't know if I'm making any sense right now, but if you're trying to find the hottest stocks of the day, and once this FinViz or any free scanner, Market Watch, whatever, if you'll get a Market Watch, this is a screener I've got set up. So intraday screener on Market Watch, and I've got it bookmarked with my parameters in to where when I click on that, it automatically is gonna screen the market for my parameters without me having to put anything in or whatever, because I've got it bookmarked. I suggest you do the same thing. So if you're having trouble finding the hottest stock, then you can just click on your bookmark and it's going to automatically take you to that screener and show you the hottest stocks. So then if I'm looking at this and I'm looking at percent change, these are the top stocks that are up with my parameters that I've set in there, and you can edit those parameters right here, or start a new screener, whatever. But you put your parameters in, which is just the volume you're looking for and the price change, the percentage that you want the stock to be up, etc. The price, if you got a certain price, I'm looking for cheaper stocks, typically under 20 bucks. So put all those parameters in. It's going to pop up. You're going to see your percent changes. Then you're going to look at your volume over here. And I can tell you, like this, for instance, has 185 million shares. That's a lot of volume, NMTR. But it is a cheaper stock, so you got to take that into account. It's a stock that's under $1. So it's traded a lot of shares, which is great. But also look at the price. If you were looking at a stock that was 0.001 cents and it traded 100 million shares, wouldn't be that big of a deal because of the price. So look at the price, look at the volume, and you're just trying to find the hottest stock. So you're just trying to find the stock that's up a large percent and it's traded a lot in volume. So the hottest stock of the day today would have been BDR, I would say. I would say that probably had the most eyes on it as far as low float momentum stocks that people were getting in and out of, day traders were looking at. It was probably BDR. And you can look at this and tell that was the case because it's over $1 stock and it's traded almost 100 million shares, and it's up 77% as of this time. And at one point today, you would have seen it up here because it was up like 300%, and you would have seen that being the top stock, and you would have seen that it had multiple tens of millions of shares of volume, and you would have known that, hey, that's the stock that day traders are trading. That's the hottest stock. So there you have it. If you're having trouble looking for the hottest stocks, the stocks that everybody's trading, you can go to pretty much any free stock screener like MarketWatch, like FinViz, and all you need to do is change your criteria and basically look for the highest percent gainers that are within your price range. You're going to look for something that's up well over 20%, preferably. As long as it's a somewhat active day, there's always going to be stocks that are up over 20%. Then you're just looking at the volume. So it's really pretty much as easy as that. You can do it with free scanners, but if you want real-time stuff that's moving right in the moment, or that's moving between when pre-market changes over to regular market hours right away, if you're wanting to see the market open, you may have to pay for that, or use the screener that's in your platform. Unless somebody has another idea, go ahead and put it in the comments if you know of a screener that has real-time data that updates right at market open, that you can see the hottest stocks. And if so, I'll put that in the comments, and I'll start promoting that in my videos. So I'm sure lots of people would like to have that. Anyway, it's pretty much all I got for today. Hopefully you guys made a bunch of money and had a great day today in the markets. Tomorrow's a new day if you did not. So get back in there tomorrow. Always opportunities to be had. I'll probably make another video tomorrow, either live or throughout the day. Let me know what you guys want to see. If you have any ideas for new videos, put it in the comments. Send me a message at my email address. If you want to support me, you can click the link for Acorns, and we each get $5 on that referral link. That'd be cool too. If not, just leave a comment, give me a like, subscribe if you haven't already. Talk to you soon. Thanks for watching. Peace out.